Imagine you are holding your morning coffee doom scrolling through the usual financial noise when a single data point stops you dead in your tracks. Bank of America, typically the bedrock of conservative buttoned-up analysis, has just staked its reputation on a forecast that borders on financial heresy. They aren't calling for a modest adjustment. They are projecting a violent upward repricing of silver to $309 per ounce within the next 24 months. If you are tracking the markets, your brain is likely rejecting that number right now. After all, silver just clawed its way to an all-time high of nearly $96 in January 2026. To suggest it will triple from here, posting a staggering 226% gain on top of record highs, sounds less like analysis and more like delusion, but here is the uncomfortable truth we investigate on The Secret. History of Currencies. Michael Widmer and the metals desk at Bank of America are in gambling. They are looking at a mathematical inevitability that the rest of the market is sleepwalking into. This isn't just a bull market, it is a fundamental breakage in how the world prices reality. Once you understand the mechanism ticking beneath the surface, you will see why the smart money is quietly scrambling to secure physical positions before the public catches on. Let's strip this down to the bedrock, the gold to silver ratio. This is the heartbeat of the monetary metals market currently. The market demands roughly 59 ounces of silver to buy a single ounce of gold. But geology tells a different story. If you look at the Earth's crust, that ratio is actually 15 to 1. For decades, we have treated silver like gold's cheap industrial sibling, allowing financial derivatives to suppress its value relative to its geological scarcity. But history has a way of snapping back. In 1980, the ratio tightened to 14 to 1. In 2011, it compressed to 32 to 1. Both times, silver didn't just rise, it went parabolic. But here is the trap: the silver market is microscopic. The entire global valuation of silver is roughly $140 billion, a rounding error compared to gold's $14 trillion ocean. If just a fraction of capital rotates from gold to silver, it's like trying to force the water from a fire hose through a garden straw. The pressure has nowhere to go. But price. Bank of America's forecast is simply the result of running the 1980 playbook on today's numbers. But unlike the 1980s, which was a speculative mania, today's crisis is driven by a force that cannot be bargained with: structural extinction. We have just lived through 5 straight years of supply deficits, burning through a billion-ounce hole in global inventories. We have consumed 15 months' worth of silver that never came out of the ground, draining it from above-ground stockpiles. The vaults in New York and London are bleeding metal. Registered inventories at the COMEX have plummeted from 350 million ounces to barely 285 million. But this time, the drain isn't just investors hoarding coins, it is the green energy transition devouring the supply chain. Every solar panel, every 5G tower is a vampire on global silver stocks. You cannot rewrite the laws of physics. Silver is the best conductor of electricity we have. Solar alone is on track to consume half of the world's mining output by 2030. We are building a future that requires more silver than exists above ground. Then on January 1, 2026, the geopolitical trap snapped shut. China slashed refined silver exports by nearly 70%. This wasn't an economic decision, it was a security maneuver. They know the shortage is coming, and they are keeping their metal home to feed their own solar and tech industries. Russia followed suit, aggressively buying for state reserves. The United States invoked the Defense Production Act, finally admitting silver is a critical strategic asset. When 3 superpowers simultaneously make a move on the same resource, it isn't a coincidence. It's a race. Here at The Secret History of Currencies, we look for the smoking gun in the data, and right now it is screaming. Look at the lease rates. Historically, the cost to borrow silver was non-existent. In late 2025, those rates spiked to an annualized 30%. That is a distress signal. It means desperate borrowers are paying loan shark rates just to get their hands on physical metal, because the paper market is failing to deliver. The math behind Bank of America's target is terrifyingly simple. Gold is trading near $4,300. If the market panic compresses the ratio back to the 1980 level of 14 to 1, you simply divide $4,300 by 14. The result: a price target smashing through the $300 barrier. This is the scenario that keeps analysts awake at night: a cascading delivery failure. Imagine a game of musical chairs where there are 100 people and only one chair. The COMEX paper market is trading promises it cannot keep. If inventories drop below critical levels, say 50 million ounces, and contract holders demand delivery, the exchange breaks, they will declare force majeure and settle in cash. But the physical metal will effectively vanish from the open market. In that moment, the spot price on your screen becomes irrelevant. The real price will be whatever you have to pay to get metal in your hand, $200, $300 or more. Bank of America has handed you the roadmap. An intermediate target of $135 is baked in just by returning to 2011 metrics. But the $309 super spike is the endgame of a broken supply chain meeting unyielding strategic demand. This is a wealth transfer event. Those holding dollars earning negative real yields are standing on the tracks. Those positioned in physical assets are on the train. The window to acquire metal at double-digit prices is closing fast, likely within 6 months. Once the media wakes up to the delivery failures, the opportunity is gone. You have seen the math, you understand the shortage. The question is no longer if this repricing happens, but whether you will be a participant or a spectator. Bank of America has put their reputation on the line. The superpowers have made their moves. Now the next move is yours. If this analysis clarified the storm front we are heading in, to share this video. The mainstream news won't cover this until silver hits $200, and by then it's too late. Stay ahead of the curve and keep watching The Secret History of Currencies.